Hello, welcome to Wander Financial. Today I want to go through a trade here with you, buying some calls. I've been doing a series of videos on buying and selling options. So this is going to be another quick run through of a trade I see developing right now, and what the thought process is behind what I see on the chart, and going through and actually making the trade in the options. Okay, so today I'm looking at Expedia. You can see this has been on a nice little uptrend in the last couple months. It's held a number of times. Right here, boom, 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 over and over again. Made one little dip through, tested the 50-day and bounced. This is another one of those ones that we like, where the moving averages are kind of flat to rising, but the stock drops down into it. The stock gives us a sell signal, but that moving averages at 20 and the 200 were still moving up. The 50 was pretty flat. So the sell signal is going against the averages, the moving averages. So what do we expect when that happens is for a quick bounce, and that's exactly what happened here. We got a quick reversal into a buy signal yesterday. Should have hit it right then when it crossed the 20, but didn't see it till this morning. Anyways, it's a little late now, but I'm going to make the trade anyways, and just to give you just to show you what we're looking at here. So it's actually not too late. We're breaking through the recent highs. It's not quite there at the moment, but I'm going to do it anyway. So we got a nice buy signal. Moving averages are moving up. We've got a short-term uptrend, and really a longer-term uptrend as well. Most of the year we've been moving up. So we're looking at current price is 135.70. Let's see, I would probably shoot for a stop, right around, right below, I guess right below the 20, maybe below yesterday's low. We'll just say 130, let's say 132.70. That puts us a little below the 20-day moving average that's rising there. Okay, so that's a $3 drop from here. Okay, so we're looking at $3 stop. That's our risk, $3 in the stock. Our target's going to be right up here around the highs, 144. So we've got about an $8 reward on the stock itself. So $8 versus $3. We've got a decent risk reward on that. Okay, so now we're going to go take a look at the options themselves. We're going to go in and make a trade. This is a video I just shot. This is just an account that I use for these videos, just to give you an idea of what we're looking at, how to make the trade. Anyways, we're closing out that trade right now, but we're going to go in and make a trade. We're looking at Expedia, EXPE. Okay, I'm going to look at November options. November options have 36 days left, so theta, of time decay, isn't really kicking in too strong yet. So buying options, we shouldn't have to worry about the theta for a few days here anyways. I always go for the monthly options. I tend to. The monthly options are the third Friday of the month. These are called weeklies. The other ones around it are called weeklies. You can see here they put W's there for weeklies, and then the monthly options November 15th. That's the third Friday of the month, and those tend to have higher volume, tighter bid-ask spreads. Okay, so we can see the implied volatility is 34%. That's not too bad. So I'm going to click on that. All right. So the current price is 135.68. We're looking for the stock to go up. So we want to buy calls. Calls are on the left side of the chain, puts are on the right. 135 calls are currently 570 bid at $6. 570 is the highest price somebody's willing to pay. $6 is the lowest price that somebody's willing to sell at. That's a 30-cent spread on a $6 option. That's about, what are we talking about, 5% bid-ask spread. It's more than I'd like to see. I'd like to see those spreads be a little tighter, 2-3%. But there's not always enough volume to support that. So it's not bad. It's 5%. It's not the end of the world. So we're going to we'll look at these at the money options of the 135 calls. So we're looking at a price of about 585. So you can see here the delta is 0.54. They're slightly in the money, so the delta is just above 0.5. What that's telling us is that a $1 move in the stock will equate to a 54 cent move in the options. Okay, so we're looking at $3 lower as our stop in on this trade. A $3 lower move would equate to roughly $1.50. So 3 times 54. So we're looking at $1.50, maybe $1.60 or 70, somewhere in that range. So we can see $1.50 versus $6. Just doing the math in my head, that's going to be about 25% risk, 25 to 30% risk on this option. Our upside, on the other hand, was about 3 times that amount. So we're probably looking at close to 100% if we were to hit our target of 144 in the stock. So again, we're going to look at the 135s. Generally, you might want to look at somewhere in the 3 to 5% of your account as the premium that you would be willing to spend on this trade. I mean, in theory, that's your max risk, but again, that's your max risk only if you let the option go to 0, which is unlikely to happen unless some really horrible news came out for Expedia and the stock, just collapsed overnight, and you woke up the next day and it was worth, $90. So we're looking at 3 to 5% risk. These options cost, I'm going to bid $585. Right in the middle of the bid-ask spread, so we're going to pay $585 on a $10,000 account that we're looking at. That's almost 6%. So these are a little more than you might want to spend percentage-wise. Again, this is when I'm talking about this. What I mean by that is we're talking let's say 5% of 10,000. That's $500 is your absolute max risk, but we're really only expecting, if we hit our stop, we're expecting about a 25 to 30% loss. So 30% of a 5% trade would be 1.5%. 1.5% is our portfolio risk on that trade. Okay, so all right, so I'm just going to go ahead and make this trade. So we're looking at buying the 135 calls, the November 15th, the monthly options, expiring in 36 days. Delta is 0.54. We're going to go ahead and just split the bid-ask spread. Now it's 575. I'm going to buy one, and it keeps dropping, doesn't it? No, we might get a little lower. Let's see. The spread's just widening out. There we go. 540, 548, 520, 580. All right, maybe we should take a look at the chart. Yeah, you can see the price is falling. The Dow has been dropping here the last few minutes. I'm going to go ahead and just complete the trade anyways, just because we've gotten this far. So now we're looking at 530 to 570. I would start out, maybe try and pay 545 for one, and I would send the order. And then we can see our bid. It's only showing dime bids and offers. I bid 545, so it's going to round down and show 540. Not sure exactly why the markets do that, but they do. So that didn't get filled. I'm going to go ahead and edit that real quick, pop it up to 550, review and send changes. Now we'll see our bid is 550 for one. That's $550. And I'm just going to leave that sit there, and may or may not get filled. But I wanted to show you how that works, so we're just going to leave it at that for now. And again, that's about it. You can see we had the uptrend. We're above the 200, the 50, and the 20 this morning. Yesterday we popped through the 20. Today we held the 20 and rallied some more. So overall, this looks like a pretty solid trade, and that's basically it. That's what I'm looking at. So thanks for watching.
Thanks for watching, and don't forget to hit that subscribe button.